When we are talking about ethics, we have mentioned individual ethics, and we've also mentioned corporate ethics. Now, one area of overlap between the two is that corporations, companies, organisations can do things to try and encourage individuals to act ethically. So, for example, companies, organisations can try and encourage the people who work for that organisation to be open, to encourage employees to always provide complete disclosure of information and reasoning. So in other words, when I am talking to you, I always tell you every single bit of information you need, and if I have made a decision, I always tell you what the reason was behind it. Now that's something I think that you would prefer anyway. I think you'd like to be treated like that. Organisations can encourage that with the way that they act. Trust. Encourage your employees to rely on the judgments of others. In other words, if you tell me something, the first thing I'm going to do is to assume that you've told me the right thing. I'm going to believe you. Rather than, and you know this goes on in lots of organisations, you've told me something, I don't believe you, I'm going to check for myself. So encourage employees to trust one another. Honesty. Tell the truth and tell everybody what they need to know. Now again, you might argue that this is not a million miles away from openness. I suppose the difference is the addition that we've got in there of telling the truth. Open, we're going to tell people lots of stuff. So honesty, we're going to make sure we tell people the truth and we tell them everything that they need. Again, organisations can encourage their employees to do this. Respect. Treating others with dignity. Now, I would imagine that that is probably going to be something to do with dealing with customers. So if an organisation makes it feel as if they don't really care about customers, then why will all the employees either? So if the company basically says, you know, we don't care about, we'll just get away with whatever we can get away with, we don't really care about the customers, employees won't care either. So try and encourage the employees to care about the customers, to treat them professionally. Now, obviously a good example is customer service. You have probably had very good customer service in certain companies, and you've probably had very poor customer service in other companies. That often comes from the organisation and the way it talks about customers. I have been involved in organisations, not necessarily working for them, where it's obvious they don't care about the customers at all. In that case, the customer service will be poor. They won't treat people with respect. Empowerment. You'll have seen earlier in the course about responsibilities and authority. Responsibility, you're given a task to do. Authority, you're given the authority to make people do what you want them to do so that you can get the task done. Now, again, a typical kind of circumstances in many organisations, you're given a responsibility. It's your job to make this happen. But unfortunately, you will need other people to help you, and you can't make them. So it's your job to make sure that the month-end variances are done on time. That means you need to contact the heads of departments of other parts of the company, and all they will do is they'll put the phone down on you. So you cannot actually do your job. So it's your job to get the variances done, but obviously you won't get them done because everybody will ignore you. So empowerment, if I'm going to get you to do something, I need to give you the authority to make other people help you if that's what you need. Accountability. Taking responsibility for work, even if other people were supposed to do it for us. So I am the finance director. It is my job to make sure the budget is done. I won't do all of it. I will get junior people inside the finance department to help me. For whatever reason, it doesn't get done. I cannot blame, it was that person's fault. It's nothing to do with me. It was the junior accountant. They should have finished their job and they didn't. Accountability, I'm the most senior person. I need to take responsibility for things. So ethics then can be something that an organisation can try and encourage. Now, the problem with ethics is there are always going to be potential situations for ethical conflicts. What that means is where we're perhaps trying to do two things that you really can't do. So an ethical conflict, looking at matters in which someone has a personal involvement. Now, a good example of this, finance director is looking at declaring a dividend. That's fair enough, okay, the finance director knows how much cash we've got. The finance director will recommend to the board, this is what dividend I think we should pay. But what happens when the finance director is also a shareholder? Now, the bigger the dividend, the more money the finance director gets personally. Is there a possibility that they will declare too big a dividend, which puts the company into cash flow problems simply because if they declare a big dividend, some of it goes to them? And the second one, advising a company that's in direct competition with somebody else. So you are advising Coca-Cola and you are advising Pepsi-Cola. Well, obviously the big problem with those two is, to a certain extent, how do you make sure that you have access to confidential information from both companies? How do you make sure you still behave ethically? It's a difficult thing to do. So ethical conflicts. Ethical dilemmas, again, are where there isn't an easy answer. If we do one thing, we're wrong, and if we do something else, we're also wrong. So, remaining silent about something that would have an adverse impact on the financial accounts of an organisation. Well, the reason we would remain silent is because we owe a duty of confidentiality to our employer. And if we were to break that, we would be behaving unethically. But on the other hand, if we keep quiet, we're also behaving unethically because we know the shareholders, the people who rely on those statements, won't actually have a proper set of financial statements to guide them. So unfortunately, if we speak up, we're breaking confidentiality, and if we keep quiet, we are not looking after the shareholders. We can't actually win. They're both wrong. So an ethical dilemma. Similarly, policies are unethical. Again, if you keep quiet, then there might be employees who are perhaps at risk because we're not looking at safety procedures properly. Perhaps customers are at risk. But again, on the other hand, if I do tell somebody, I'm breaking my trust of confidentiality with my employer, so what should I do? So as far as ethical conflicts are concerned, the ACCA say you should not accept those engagements. So in other words, if I am the auditor of Pepsi, and Coca-Cola come along and say, I want you to audit our accounts, I should just say no. Sorry, I can't do it. You should evaluate the threats arising from them and apply relevant safeguards. Now, the best way to look at this one is with an example. Imagine you are talking, whichever country you are in, doesn't matter who it is, imagine you're talking about a bank in your country. Banks are complicated things to audit. Most banks are companies, so they need an audit, but they're complicated things to audit. There might be a limited number of auditors in your country who have the skills, the knowledge and the experience to actually do a proper audit of a bank. If you think about it, if you were a company that actually didn't really know how to audit a bank, you'd be putting the shareholders at risk. So it needs to be somebody who knows what they're doing. The trouble is, there may be very few of those, but there may be lots of banks. So, for example, in the UK, the Big Four auditors will have lots of experience of auditing banks. I'm not saying nobody else does, but it's just an example. The Big Four auditors, the Big Four accountancy companies, have experience of auditing banks. But there's lots of banks. So the chances are that a company like KPMG is going to be auditing two competing banks, maybe even more. So they can't really avoid that. So what do they do instead? Apply relevant safeguards. let's make sure that the two banks are audited by completely different sets of people, with completely different audit partners, in completely different offices. Because obviously, if it was all audited in the same department by the same people, it would be very easy for somebody to say, I know this about one of your rivals. So it'd be very easy for that to happen. So let's try and avoid that from happening. Let's make it as difficult as possible for that to happen. Another situation where you often get things like this would be, for example, in an investment company, where an investment company might well be perhaps preparing a company to be floated on the stock market, so they actually know how well the share, they actually know a lot of detailed financial information, but at the same time, the same investment company might be advising people which shares to buy. Well, obviously, there's a potential conflict of interest there, so try and keep those two bits completely separate. You can see it says there, if in doubt, the accountant should disclose the conflict. So in other words, you are a bank, you come to me, and I say to you, I will happily audit your accounts, but you should be aware I already audit one of your rivals, as long as that's okay with you. And I'll have to check it's okay with your rival, because obviously I'm going to be auditing your accounts, then at least I've told you about it.